explain a few things.
The Finsightful YouTube channel provides educational content only. All information shared by Finsightful, Matthew Brown, Nathan Moss, or any guest reflects personal opinions and is not financial, investment, tax, or legal advice. Viewers should do their own research or consult a licensed professional before making any financial decisions.
Okay, rapid fire over. Let's get into it.
Hello, YouTube subscribers and Finsightful members. Matt Brown here, coming to you live from the studio in Sydney. It's been a very exciting weekend with the Trump tariffs again. They're on again, they're off again. It looks like they have come to an agreement with Europe that they're going to put the 50% tariffs on hold for another, I think it's like 60 to 90 days, whilst they continue to negotiate on what is going to be fair for everybody going forward. But that's not what I wanted to talk to you about today. What I find that the majority of new traders have the biggest problem with is their psychology and the way that they mentally approach the markets and the way that they think about their trading enterprise. The first mistake that most people make is they actually don't really believe that they're running a business. And so what you must thoroughly understand is that when you are starting out in trading, you are starting to learn a new skill of technical analysis, understanding economics, and then you are in the business of trading to generate a profit. And then so that business needs to be made up of a couple of different things. One, you need to have a balance sheet, so you need to have capital to actually trade with. And then you also have a profit and loss. So you need to be able to either afford to pay yourself a salary if you're doing it full time, or you need to be able to fund all of the expenses that go along with trading, the software, the brokerage, the newsletters, whatever it is that you are subscribing to. And one thing that I would truly recommend is what has done light years of education for me is to get a mentor. So find a coach or a mentor or a group, a community where you can plug in and access years and decades of experience, because there are plenty of successful traders out there that are happy to share. But when I think about like the top 10 psychological hurdles that they need to get over, the first thing is the fear of missing out, FOMO. And this is where you are too concerned about not making a winning trade and potentially trying to chase a setup once that setup has gone, or trying to just be alert and be watching the market 24/7. None of those things work. Set your trading strategy, have your business plan, have the hours available that you're going to be trading in the markets, whether that's live or just looking for setups and putting in your entry orders, and then let the trade do its thing. Do not fear of missing out. You will always, I guarantee you, as much as you're going to lose money trading, because we all lose money as successful traders, you have to fall in love with that concept. Not in love with it because you want to do more of it, but you need to accept that that is just part of business. And so you are going to miss trades, I guarantee it, but don't worry about it. The other thing is loss aversion. So they can't pull the trigger. They are too scared they're going to have a losing trade or another losing trade. This is where you need to build in your trading system, your backtesting data, so you know statistically, when I trade this particular setup, I'm going to get 6 out of 10 winners. That's 60% win rate. But it's a 3R trade. So when I win, I make 3 times my risk. And if you have 4 losses in a row, well, you can either stop trading for the day, if that's part of your rules, if that's part of your setup, or you know that the next winning trade is like just around the corner. But these are all money management concepts that you're going to build into your enterprise. The next thing is greed. So trading, not necessarily to take successful setups, but trading with the idea that you are trading to earn yourself something. You want to turn a $1,000 account into a $100,000 account, or you want to turn a $100,000 account into a $10 million account. Are those things possible? Definitely. But what's the likelihood of a beginner trader being able to do that? Do not trade when you have any sort of heightened emotion, particularly greed. And this can come from a spouse or a partner or a family member seeing that you're successful and going, great, you're now a successful trader. Please, can we buy that new car? Please, can we go on this holiday? Please, can we upgrade the house? you must stick within your trading parameters and don't go outside of those, because that greed will take a hold of you and you'll start making poor decisions. It will play on your mind. Confirmation bias. So when we're building our suite of indicators, or when we're looking at some economic data or what's happening on the chart, you should be following a set of rules that are duplicatable, time in, time out. Don't just look for confirmation. Don't just look for information or indicators that confirm what you already think. So you wake up this morning and you see a big red candle on your chart. Okay, it's going to be a negative day. And so you're going to be looking for indicators or other reasons why you're going to want to get short that day, and that could be completely wrong. So confirmation bias is a huge problem for beginner traders. Follow your trading plan. Revenge trading. So we've all done it. We've gotten long and we've gotten stopped out. So we reverse the trade and then we get stopped out and our stop loss on that. So it's just chopping around. Follow your trading plan. Nearly every single one of these 10 psychological hurdles can be overcome by being patient and following your trading plan. Revenge trading is absolutely the worst thing you can be doing, particularly if in your trading plan you might have 3 losses in any one day, or then I'm going to stop trading. That's my last trade for today. But typically what some people might do is they're like, oh, this is the perfect setup coming. I'm going to risk 3 times so I can make all my money back faster. It's crazy. Don't do that. Anchoring bias. So similar to confirmation bias, what you're doing is you are anchoring yourself onto an idea, or you are holding onto an idea which may not necessarily be true. And you don't want to do that. You want to ensure that every time you are entering and exiting the market, you have a tried and tested trading strategy, which is going to take the emotions and all of these biases out of your actual trading. Recency bias as well. So like I mentioned just before about, we had a down day yesterday, so we're obviously going to have another down day today. What recent information, the markets, yes, even though they rhyme and they have rhythm, you're not going to necessarily have 3 or 4 or 5 or 6 consecutive down days or up days. You need to be looking at the markets with fresh eyes every day and then building upon your long-term thesis. Trade with the trend. Yes, you can make plenty of money selling or buying into retracements, but I would suggest that you are going to make more money and you are going to survive as a trader for a lot longer period of time, particularly if you're just new to the industry, if you trade with the trend. And so just have simple rules along the lines of, I'm only going to trade long positions if the price is above the 50 or the 100 simple moving average on a daily chart. And then you can look at any time frame underneath that. It could be 4 hour, it could be a 1 hour, it could be a 5 minute. But you will only ever trade long because the general direction is long, because price is above XYZ, simple moving average or exponential moving average, whatever it is that you want to use, whatever it is that you have backtested into your strategically proven and tried and tested trading strategy works. You've got to accept that no one knows what's going to happen tomorrow. So accepting uncertainty. Once you enter that trade, we have no idea what's going to happen with price after that. We have no idea what Trump is going to tweet or put on Truth Social next. We have no idea what is going to happen to the price of anything. We have made an educated assessment as to where we think we can profitably enter into the market. And then you just let it go. Let the trade play out. The other thing that I see with the majority of just people or humans in general, so this is the 10th one, is just a lack of discipline. So you need to approach the markets as an extremely disciplined person, following their business enterprise trading strategies and plan. You need to be splitting up your time between educating yourself, backtesting new strategies, and then actually trading. And that is part of being a successful trader. You are always looking to try and sharpen the saw and continue to learn, because there are so many parts of understanding what happens in financial markets, regardless of what they are. Whether you're trading stocks on the S&P 500, whether you're trading, futures contracts, whether you're trading gold and precious metals, whether you're trading currencies, whether you're trading crypto, no matter what asset class you're trading in, there is so much to learn, not only about trading itself, but then also about that particular asset class or that particular business and how it all interplays. Because currency interplays with how public market companies perform, plays into what's happening with interest rates with the Federal Reserve, plays into what the spot price of different precious metals are. It is all interlinked. We live on a globally connected planet. Globally connected planet, that makes no sense. But everything is interconnected, particularly global finance, because of the way that it is structured at the moment and because information can move so quickly. So they're the top 10, I guess, trading hurdles or psychological hurdles that beginner traders need to get over to be able to become successful traders. The key thing that is going to help you get over that is, one, build a successful, back-tested, tried and true trading strategy that works for you time and time again. You want to be looking to build something that is going to be at least 50% profitable with a 3R risk reward. That means you're going to be making, that means you are a profitable trader. Now, the higher the percentage profitable, fantastic. And then the higher the R, the risk, the return on the risk that you're going to take, again, that's better. And also, if you're an early trader, please join a community of successful traders, people who can mentor you and coach you through all of these beginning phases of your trading strategy. The most important thing is for you to maintain capital. If you blow up your trading account, you now no longer have the ability to be able to make money from the financial markets. So, preservation of capital, get into a community, get a coach, get some mentoring, get some education, and don't make these mental model mistakes. Look forward to catching up with you on the next call. Good luck out there for Insightful members and YouTube subscribers.